Today I'm joined by Robert Frei, 20 years in charge of air freight with a top 5 freight forwarder, instrumental in TAC Index product definition and data sourcing, acting business development director focusing on freight forwarders and also a founding member. Niall van der Wouw is managing director, co-founder of CLIVE Data Services, 30 years plus of experience in air cargo industry, which started off building pallets during university days. I think we're from the same background. I've still got the scars on my hands from the warehouses. Just want to make sure that we are compliant. So both fully trust compliant. TAC Index is a additional financial services market compliant. For those reasons, we will not be talking about forward-looking statements, etc. So we're compliant on that side. So welcome, gentlemen. Thanks for joining us.
Thank you.
So
Thanks very much.
So today we're going to talk about the state of the market in flux, the challenges, understanding where we are with pricing and capacity. So why don't I start with you, Robert, from a TAC Index standpoint, pricing-wise, how are you seeing things currently?
Okay, we are happy to do this. Dear viewers, welcome. TAC Index is actually much more than just a benchmarking tool. So we are publishing weekly every Monday for the previous week and do this since 2016. We use one single source. This is the freight forwarders, and we use transactional data. And talking about the situation, which is not very pleasant for anybody, based on the index that we have launched, we can now also use this for new products that are currently being developed, and they could easily or most easily explained as insurance products to safeguard your total logistics spend if you are a BCO, or your margins if you are a freight forwarder or an airline. We'll come back to this at the end of the presentation, and now let's jump right into the current state of the situation. So first we are looking at China to Europe and US, vice versa, and look at the pricing developments. These are absolute numbers, and they represent the so-called AMP, actual net price index. So as we can see in both markets, the prices actually peaked before Chinese New Year, going towards China, and outbound it came with a delay of about 3 to 4 weeks. This had to do on the one side with Chinese New Year and the prolongation of the holidays, and on the other side, obviously with a lot of flights being cancelled on the Trans-Pacific, but also to Europe due to the passenger aircraft thinning out their schedules. What is here really remarkable is that we can see that prices on the Trans-Pacific and to Europe have been more or less in the same line, but now have peaked, and you can see that from China to USA, prices trend now $1 higher than they do to Europe. Next slide, please. However, most significant, and this is really interesting, is that the pricing development intra-Asia. Here we are looking at China to Singapore. And we can see here very clearly that the factories have started production again. And we also assume that e-commerce has increased again due to the fact that people can't go out shopping. And you can see that prices intra-Asia, or here in particular from China to Singapore, are now at the level of China to Europe. Next slide, please. Now, if we look at the transatlantic, we can see obviously a very, very interesting development, and prices have been extremely stable in both directions until passenger aircrafts were withdrawn due to the ban that Europeans could not fly to the US anymore. And then prices soared dramatically because many of the European manufacturers wanted to ship parts to the US to their factories in order they can start production immediately after the lockdown has stopped. And as you can see, prices westbound went up over 200% in just 1 week. and they are now trading transatlantic also on the level China to Europe. So next slide, please. For Hong Kong, we look at it a little bit from a different angle. We are looking here now at the relative change, and you can see in principle the same pattern as we have out of China. The biggest increase is to intra-Asia, and again to do with obviously the factories revamping and the e-commerce. And in relative terms, since the beginning of this year, prices to Southeast Asia have gone up more than 70%. Here out of Hong Kong, the increase has been more or less the same for USA and Europe. So with this, I'm happy to hand over to Niall.
Thank you, Robert. Good afternoon or morning, viewers. Thank you for the next slide. So if we look at the volumes, so the what we call the chargeable weight from Hong Kong to Europe, and as already Paul mentioned, our source is also transactional data, but this side from airlines. If we then look at how the Hong Kong to the European market has developed the last couple of weeks, and Hong Kong being a bellwether for the global air freight market, and we can quickly see in calendar week number 4, a little spike just before Chinese New Year, people trying to get their goods out of Hong Kong in the hands of the consumers. Then we saw the big drop when Chinese New Year started week number 5. And then we had Chinese New Year combined with the whole virus situation. And what everybody was expecting then was that once the factories would initially open up, we would see the floodgates open and tremendous amount of volumes hitting the market. Reality was different. We can see a incremental, continuous, or shifting gear, I would say, of production facilities. And only as of last week do we see that the amount of weight exceeded the volumes that we saw pre-Chinese New Year. So it's taken about, what is it, five weeks in order to get, let's say, back to a normal. What is also interesting to note that until last week, we could see that the amount of chargeable weight relative to last year varied between, well, at the darkest moment, minus 47%, but somewhere between the 13 and 25, 26%. But last week, it was just close to 3% less than the volumes we noticed the same week last year. So there's definitely an upward swing to be seen on the Hong Kong to European market. What the future will bring us, very uncertain, with the virus taking hold in Europe. But this also clearly resembles the price increase that the TAC Index reported on the Hong Kong to Europe. These are just the volumes. If we could have the next slide, please, then we can look at the load factor. And different to other load factor statistics that often just reflects the weight load factor, we look at how capacity is being utilized from both a volume and a weight point of view. And here we can see the last couple of weeks, in good jargon, the flights are being chock-a-block full out of Hong Kong, westbound to Europe and the Middle East, with load factors ranging between 95, 96%. Again, confirming or in line with the price increases reported by the TAC Index. What I would like to point out here as well is, and that was pretty unique, in calendar week 6, you can see that the eastbound load factor, so flights from Europe and the Middle East into Hong Kong, was higher than the westbound load factor, ex-Hong Kong to Europe and the Middle East. And we believe that was the first time in maybe 15 years that occurred. and it showed how large the impact was of the virus situation, whereby there was a demand for freight into Hong Kong higher than there was a demand for freight out of Hong Kong. Truly unique. Now we can see it's back to normal with the load factors into Hong Kong between the 20 and 30%, and the ex-Hong Kong load factors high in the 90s. The last slide, please. There's been a lot of talk about the developments across the Atlantic. Maybe for the viewers, the market across the Atlantic is mainly dominated by passenger aircraft. So passenger aircraft provides the vast majority of capacity, and with the bans set by multiple governments, as well as the decrease in passenger demand, and many airlines have scheduled back. And the expectation was, what's going to happen? But if we take a few steps back, we can see here what we did is we indexed week 36 of last year, which was the first week of September 2019. We set the capacity on the left axis at 100, and we tracked per week how that capacity developed. And the orange line is the dynamic load factor. So what we can see if we go back to September, and we see that with the weeks passing by, we see the summer schedule, less tourists across the Atlantic, so capacity goes down, and therefore the load factor from the 70s goes up to the low 80s. Then we hit the Christmas period and New Year with a decrease in capacity, but also load factor, because there's simply less demand. That went up back quite quickly. And here is the new thing. So the last 2 weeks, we saw already quite a decrease in capacity. But what struck us is that the load factor itself remained fairly stable. And we are not, and if we look back to Robert's analysis, he saw a big spike in prices. And we do not know yet how to match those different angles, because based purely on this analysis, we would expect the rate to be relatively flat. Yes, far less capacity, but also less demand, and therefore a fairly flat load factor. In week number 13, that's where we will see the largest drop, I think, again, where airlines are hardly flying across the Atlantic. And maybe there we will see a spike in load factor. But if you look at the last few weeks, volatility is clearly there. And dealing with such volatility, and whatever scientist says, this cannot be predicted. So how do you deal with that kind of uncertainty? I would like to hand it back to Robert, and to see what kind of services are available to deal with such uncertainties. Robert.
Okay, Neil, thanks very much. Obviously, it's again interesting that when you get the real facts, that it kills a lot of all these rumors and emotions, because when you talk to people, they're all talking about extremely soaring prices. But as our facts have shown, this only happened last week or 2 weeks ago, and Neil confirms a similar pattern on the capacity side. So let's closely watch what's happening in the next 2 weeks, and then hopefully we'll find some answers. Now, yes, coming back to my initial comment made about the insurance products in the market. So in this example, we are actually looking at the price distribution year over year, and we are starting with Chinese New Year as week 0. So on the y-axis, we show the volumes in chargeable weight, and the x-axis are the prices. So the more to the right and the more up, the higher the prices at bigger volumes. So what you can clearly see if you look at week 0 and week 1, the BSAs have had a peak roughly in the middle there and high volumes. And then it started to deteriorate in terms of BSAs versus spot, ad hoc, or even part charter prices. And there you can basically see that in the last 2 weeks, most of the BSAs have been broken up. And this is a clear indicator to us, and we have seen this in other markets, be it iron ore or similar markets, dry bulk, that whenever long-term contracts are broken up widely, then the market is normally ready to accept new products, and normally you can then use index-linked agreements hedged with air freight forward agreements to basically balance off that risk. So what do? They basically are outside of the physical market, and they help to rectify the current problem of long-term contracts being broken up. So in the immediate term, using air freight forward agreements, you can basically lock in your margins if you are a forwarder or an airline, or you can lock in your total logistics spend if you are a shipper or BCO. However, all this is only possible if you have a reliable and financial market compliant index, and TAC Index is actually serving as the settlement price for these instruments. These instruments are currently being introduced into the market by FIS, Freight Investor Services London, who is a specialized interdealer broker. And FIS, just for your information, is also producing a daily market report, which everybody can subscribe to. And part of this report is a forward curve, how they see the development of the pricing until calendar year 2020, so full calendar year 2020. TAC Index is used as one of the sources, but they obviously have other sources to complement their research and then to draw their conclusions. So hopefully in the future we can have another webinar together, possibly with IFS, to talk more about these risk management tools using financial instruments in air cargo, which is new, but it's happening as we speak.
So I think, Robert, there's definitely an interest, certainly from our customer base. We've talked on the ocean side about indexing for the last 6 to 12 months, and indexing isn't anything new in the industry, and there's been many different formulas. So I think, from what you're saying and the current state of the market, you think that is going to be something that's going to be more or increased discussion. In addition, a number of our shipper customers are obviously concerned when they should go to RFQ, right? Because of the volatility, et cetera, et cetera. So there's two dynamics to this. Do we want to consider as a shipper deferring our RFQ and the indexed solution in the air freight market? Do you think that's going to become more prominent in those kind of discussions?
Yes, absolutely. But what we have to see is it's not an either or question in our opinion. Really, these ILAs or AFAs are additional tools in your toolbox. And what we could think is that possibly instead of having 100% covered by RFQ, you do an RFQ for, I don't know, 40, 50, 60% of your regular production that and the uncertainties, the remaining whatever percentage you cover through ILAs. And then you can balance off your risk a lot better. But what the AFAs do is that you can also go outside of the physical market and really hedge your risk in the financial markets. And then you can balance it off. You can take higher risk on your RFQ, so to speak, and always balance it off on the financial market or the other way around. Really, okay. It's opening up new ways. But again, it's really important that everybody understands we are not trying to change the market completely. We're just offering new tools, and that people should use that best, involving obviously their treasury departments who are well versed with managing risk when it comes to foreign exchange, or for the airlines when it comes to fuel.
Okay, well, definitely a discussion that we could have a webinar just on that one subject, right? So I think it's definitely on the forefront of a lot of our shipping customers is, what is out there, what tools, what advice, which direction should I go in, etc., etc. And obviously the forwarding community are asking the same as well. So very interesting points. So yeah, sorry, go ahead.
Yeah, it's a good point that you bring up here. Obviously, this is not just between the shippers and the forwarders. These type of contracts can obviously be used the same between airlines and forwarders, and it can also be used amongst airlines to replace the current interline agreements. So it really opens up for everybody all new horizons.
Excellent. Well, gentlemen, again, short and sweet. I'm sorry we didn't have more time to go into more detail, but we will certainly circle back, because I know the data is very live. So this interesting discussion will perhaps circle back in 2 weeks or so to see how that's changed and what different things have impacted the market. So we'll certainly come back to you. So thanks again for your time today.
Thank you.
Thanks very much for the opportunity, and look forward to be back.
So just to summarize, all the data for our information that we're getting from the Xeneta customer discussion forum is on communityxeneta.com. As I said, feedback from the gentleman on the call today will be posted there, and we will be circling back to get more input from our experts in the coming weeks. So again, thanks very much, guys, and see you soon.
Thank you, Paul. Stay safe.